following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Well, welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, CMT with NinjaTrader, and it's my pleasure, as always, to bring back Anthony Crudele to develop your edge. How you doing, Anthony?
Good morning, Tom. Good morning, everybody. Busy days. I know everyone's talking about equities right now, but I've actually been trading the bonds a little bit more, treasuries. I trade the 10-year. I'm going to put the ZN up today, show my morning trade. And I think it's really a good market, I think, for a lot of equity traders to take a look at. I've talked about this before. I think that if you're a scalper and you like a two-way tape, I put that in my morning note this morning. I think the treasuries are a good market to trade. So, we're going to talk about trading treasuries, but I'm definitely going to go to the charts and take a look at the equity indexes as well, because I think obviously they're playing off each other. It's just busy times, Tom.
It is, and we see that in the volume. I mean, ZN, I know that's what you're looking at. Busy times. We've got almost 2 million contracts traded today. That's comparable to, if you combine the micros and the regular E-minis to any stock index future. So what's interesting to me is, kind of the range that these markets have and how that can be appealing.
It's just a more predictable range.
Mm-hmm.
I mean, look at this morning, I was looking to sell rallies in S&P. I thought it was a pretty decent squeeze high. And then, the market it rolled over so fast. I was able to get like a couple of shorts on, then I sold one. The next thing you know, I'm getting stopped out. It's hard to predict how far it can go.
Mm-hmm.
In equities like right now, even the NASDAQ, I heard you guys on the previous segment talking about it. I mean, it looked semi-capitulation to me. I mean, the thing can come all the way back now. I mean, and obviously volatility is good for traders, but I'm so much more of a directional trader that once I pick a side, I pretty much stay with it. Trying to pick both sides of an S&P or NASDAQ right now is just very difficult because, that NASDAQ low looks like it could be a decent low. I think one of the listeners was saying, that looks like a reversal. And you know what? I can't disagree, but overall on my bigger picture stuff, it still looks like a rally to sell. So it's like, I mean, I'm not trying to stray people away from trading those markets right now. What I'm basically trying to say is when it gets really busy, I almost am just putting on alerts and almost only waiting, or I watch the opening range. I'm watching the first 30 minutes and I'm trying to see like, okay, where can I get in and manage risk? Like this morning, I actually start off with S&P. And I thought the high this morning in the S&P was a pretty decent squeeze high. We talk about this all the time, Tom. This morning I saw that. By the time I was really convinced it was pretty good, we're already trading in the belly of the bell curve, right? Of the first 30 minutes. I was waiting for the first 30 minutes to get done. And I was looking at it going, okay, now I got to be short where to stop above that high. And it's just it's a lot of risk,
Mm-hmm.
I mean, I'm selling minis with a 15+ point stop. And I'm hoping that I get 15 points to the downside on already a move that's been lower. So it's just, when I look at it, it's just been, it's difficult to see what this market's going to do because they're trying to find a low. And so I always say, when the markets get really whippy, pick that side. And a lot of times I look at the bond market. And the reason why I look at the bond market is because the bond market, if equities are really busy, you're going to get some of that busyness over into the 10-year or the 30-year, and you get some really good fills. Like a lot of times you'll look at the 10-year right now. I mean, right now it's gotten pretty slow, but it's got sizable volume on both sides and you could get in and out no problem as a scalper, short or long. I mean, and the goal of a scalper is always, at least I was taught, to be able to scratch a trade. And so when the treasuries are getting busy bouncing off of equities, it's typically a good trade. I'll get into the 10-year a little bit more, but I think, just looking at S&P before I close out, and probably I want to move on to NASDAQ and get your thoughts on it. It's just when I look at this market right now, big picture is bearish because of the widening of the Bollinger Bands on the daily. We've talked about this so many times, Tom. Range expansion below the 5-day. When you go to the NASDAQ, I don't have that chart up right now for the NASDAQ, but it looks very similar to the S&P. And I was watching just what's happening here this morning. And like you had somewhat of a capitulation low, going back to what that user, somebody or listener user had talked about. See down here how that volume got really strong selling to the downside.
Right.
And it just squeezed right off of it. I mean, you saw big red sticks here on the negative delta, and they reversed that fiercely. This could be a good low for NASDAQ. I would not be surprised to see new highs for the day. I'd probably look to sell it again, but for right now, back in this belly, oof, hard to be short now.
Right. And like you said, it goes against your overall thinking, which is NASDAQ's down 5% off its highs. We've got a couple of big red daily candles. You're below your moving average. You've got the widening bands, like RSI near overbought, right? Or trending towards oversold rather. Just everything. So how do you buy into that on a day like today? It's difficult.
It is. I mean, but NASDAQ now, I've talked about this a little bit on social, in my Discord, my morning note over the last week. The NASDAQ's the downside leader. It's the market I want to look to sell the most.
Mm-hmm.
Not really getting a ton of opportunities to get in once this thing starts ripping lower, but I know I'm not looking long, which has, been a saving grace. Obviously, I'm not trying to pick bottoms in this thing right now, but
right.
When I look at this, you're in range expansion, much clearer than you are in S&P. And below this 5-day moving average with that mouth opening, it's like, like rallies might be fierce. I mean, like this thing could rally 200 points and still be bearish. It could rally 400 points and still be bearish to me in the short term. That doesn't mean that this isn't a good low, but I won't know that that's a great low until days to come. And so for right now, I'm just trying to give some people some ideas of what we're looking at in equities and why that matters to the bond market. I'll get to in a moment, but that's what I see in S&P and NASDAQ. It's like, we might have a short-term low, hard to trade off it, hard to lean on it.
Yeah.
I think you just wait till the dust settles. Maybe it blows off a little steam here and rallies back. Wait for a short setup, sell it again. That's the way I look at the market right now.
Yeah, and you might not get that today, right?
You may not get it.
Yeah.
I mean, it may not. I mean, that's the hard part about this. I mean, I go back and look at S&P. We're just back to really where they came in an opening range. And like I said, to me, I was watching the first, 30 minutes, watching the 10 o'clock. And it's like, by the time I'm able to start getting short, I'm getting short in just really not great places. It's just not been a great day for me in the S&P. It's just tough because I want to be short. I don't want to be long, but my risk reward is getting a little skewed at these levels, right? And you talked about how the delta is getting really negative. And that's the other thing is like when you see it get really negative and the market keeps going lower, it's almost like you could have a capitulation move. You could have a limit down day. You could have something like that happening. So that if the only thing I know is just don't look at longs, I just can't look at a long because this market is just not done yet. Now, maybe in the short term now it is, but I'm talking about back earlier and even in NASDAQ, I'm like, I'm not stepping long in front of this thing.
No.
You're better off buying a bounce, leaning with a quick stop. I wouldn't do it, but you're looking at it for that in the S&P. NASDAQ looks like a little bit of a better low, but ultimately, this market to me is wait for the next short setup. And how that feeds over into the 10-year market is that everyone's talking about what's going to happen with rates again, right? I mean, are we going to see a cut, right? 50 basis points in July or September. All of a sudden, this comes back again. It's surfacing. This loosens up the treasury market a little bit.
Yeah.
And that's such an important thing because this market, I'm not trading this market every day. And I'm not trading this market when the S&P is more rangy and more trendy, because that's the better market for me because I like direction. When this market gets a little loose, I like it a lot. I like it on data points. I like it when the S&P and NASDAQ get really busy. And I like when there's a lot of uncertainty with rates. That's when the treasury market for me as a day trader is the best. I'm not really swing trading this market. I mean, every once in a while I'll have a swing, but it's very rarely. It's mostly day trades because in this market, this to me is a true scalper's market. And the reason is because the range is more predictable. Here's the trades I did today. The range is more predictable and I can lean with size in an area I really like. There's not really a lot right now that I love about any specific prices. I'm just looking for squeezes and I'm trading anywhere between 2 to 10 lots on it. And and I'll just click in 1 to 5 at a time to try and get in. Let me go back to this chart because when I look at the 10-year right now, pretty much flat 5-day, pretty much flat Bollinger Bands, a little bit of range expansion possibility, but look at where we are. We're like just stuck, very similar to almost what we were in not too long ago in S&P and NASDAQ. We were kind of just like, kind of our little rotation off a rally. And so it's a two-way tape to me. It's not really clear directionally higher, which would be lower rates if everybody doesn't understand how the treasury market works. And if it goes lower, it's higher rates. And so maybe you favor the longs a little bit just because the rate cuts with a really fierce sell-off in NASDAQ and S&P that it's hard for this market to really collapse because if we're going to get ugly in equities, you might see some people step in and buy the bond market because if they're going to cut rates early, it's probably not a really good sign. It's not going to be because inflation's under control. It's because there's something wrong, right? And the Fed is going to say, hey, we're cutting 25, 50 basis points now because we see something you don't. I mean, that's ultimately what the story plot would be. And that's the way the equity market and the bond market would take it. And so you maybe favor longs a little bit. And so that's just my mindset coming into the day because I know I have to wait for shorts and setups in S&P and NASDAQ. I'm not bottom feeding because it's just too difficult. I know that the 10 years in a two-way tape, maybe I favor the longs a little bit. So my mindset is if I want a day trade, I want to scalp, I'll focus that energy there and I'll just look for squeezes. I'll look for a lot of buying on a rally, a lot of selling into a low that they can't advance and look for a rotation.
So question for you on this chart. You're trading at the top of your 30 to 70% zone, and you're above the moving average. So the 5-period moving average. So things are looking a little bit more bullish for bonds, or in this case, 10-year notes. What happens if we see a continuation into that 70% area, 70 to 100% area? Are you looking more directional in your intraday trading, or are you saying, you know what, I'm going to step away because it isn't two-way tape, and I you say you like directional things, so a step up into that 70% to 100% indicates cutting rates, like you said, probably not for the good reasons, right? Maybe labor market is starting to really weaken, so they have to cut rates and goose the market. So is it something that might shift you back to equities if it gets that extended, or is it more attractive?
Well, let's put it this way. If equities are still going lower, my focus is still going to be on selling rallies in S&P and NASDAQ. That's just because that's where the money is, right? You hope.
Right.
That's where I think the range expansion could be. I'm not super interested in the treasuries if we get in a really tight, trendy market, because once again, I like treasuries during data. I like treasuries when there's a lot of uncertainty because the tape gets loose.
Okay.
And what do I mean by that, everybody, right? When you look at the bid and offer here in the treasuries, it's 4,000 to 6,000 up. Okay. And so, if you're going to get filled, I don't really buy the offer or sell the bid unless I really, really want to get in. Like earlier, I'll show you my trades and let's kind of go over that scenario.
Mm-hmm.
So this is what I look for. I mean, just to answer your question, Tom, yeah, like if it gets trendy higher and the moves are becoming somewhat substantial and the tape is pretty loose and equities are getting hammered, I'll keep one eye on a squeeze lower in the treasuries, but then I'll only look long, right? Right now, I'm looking two-sided tape. And I'm keeping my risk really tight for reasonable opportunities, right? These are not like get rich days in treasuries. These are just days where I can just rotate out of, like I said, anywhere between a 2 and a 10 lot.
Mm-hmm.
And I'll try to make a few bucks. And the way I look at it is this. If you look at what happened this morning, you go back and get my my pointer here. And if you look at what happened this morning, so this morning, okay, first of all, I have this on regular trading hours. We're going to do a show on this, and we're going to have Kags with us because we got to talk to him about this. The reason why I like regular trading hours is because I focus a lot on, well, my daily charts are not regular trading hours, they're all hours. But then when I get into trades, because I'm using order flow, I just want to see what's happening from regular trading hours. So this is the bond market regular trading hours, which opens up at 7:20. And so I saw this morning, I wasn't trading at the time. I'm like, okay, a little action up at the high. Probably an okay high where like they tried to buy this market pretty good and then big seller came in and just took us lower, right? Okay, maybe a trend or lower, but not, I don't really look at this the way I look at S&P and NASDAQ where I'm like, oh, it's going to be a trend day lower. I only want to sell rallies. I've already established on the daily chart that this is a two-way tape, right? I kind of feel like it's just going to be a little loose. So I want to look for where I see sellers come in a heavy area and they just can't push through it. And I'm hoping I got a standard deviation line there. When you look this morning, I finally saw something. So this morning, and these are my live trades, this is my live market here. When we got down here, I was saying just basically all sellers coming in, hitting the bid. The overnight low was like 20, 20.5, right? If you look here to the right, I saw that they were coming in selling. I'm like, okay, are they going to make a new low here? And it just kept getting absorbed. It just kept going like 24.5, 24 offer, right? And next, so I look at it and I'm like, man, they cannot push through this. And they're selling, 100 lots and boom, 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 just keeps hitting it. All of a sudden I start seeing staying bid at 24.5. What do? I buy one at 25. I was working a few at 24.5, a few at 24. Because now I'm like, if they fill me and they make a new low for the day, I'm out. So I'm going to lose 4 to 5 ticks at the most, right? Or maybe even a couple of ticks, because if they would have started blasting through me, I might have just covered them. Right. But this is an area where I'm going to take that absorption, because if there's a steady buyer down here and I'm watching equities at this time just kind of get killed, just all of a sudden opening range is the high and we're just going lower and the bond market's trying to go lower, but it can't. There's a buyer there, right?
Right.
And so I stepped in and I bought one at the market at 25, one at 25.5. And I didn't want to buy more because at this time I'm working the bid because the tape is a little lower. So I was trying to buy 3 at 4.5, 3 at 4. I was trying to get anywhere between 6 and 10 if I could, right? And have a 4 to 5 tick stop. I ended up only getting 2, which is fine. Whatever. You don't ever want to bark back at a winner. And then I said to myself, well, where do I want to cover them? And I wanted to cover them back up where we come back to the VWAP. And you saw this high volume node from the previous 30-minute bar, because that's what this is, a 30-minute volumetric chart. And I saw this was a high volume interest area. And because that there was some buyers here last time and it failed, I figured there would be sellers. So when it went up there, I sold it. Actually was pretty much right around the high of this 30-minute, and it just stayed here for a minute. Next minute, we opened up, equities escalated lower, and then the market went up higher. It is what it is. But, I took my scalp. But that's the way I look at it. I'm trying to make 3.5, 4 ticks for right around that of risk, if that. And so that's the way I look at trading treasuries. And now, maybe we'll see if we get something else here. Like I kind of like this little squeeze high. I actually was working 4s. 3/2 and 4s as I was watching you and Tom, or you and Jimmy, and I just didn't get them, and I didn't love it too much just because it wasn't near a standard deviation. There wasn't a little more confirmation, but it would have worked for a quick rotation. Once again, I'm going to risk 2-3 ticks to make, 2-3 ticks.
So now I'm seeing a bunch of selling coming in at these levels. Are these good highs? Maybe it isn't enough of a range to say that, it's a lot of selling at the high, but it just seems like now we might have hit some resistance. Are you thinking of going the other way possibly?
Well, you mean like right here, how he sold 600 and something. So they're selling several hundred on the bid here. Right. The problem is right now, as we get into this kind of late morning, it's just it's so tight. Like it will, like I said, I go back to, it was a little loose here. It's like, what am I going to do? I'm going to try to buy a 1 to sell a 1/2 or a 2.
Right. Exactly.
It's just, I don't see, like, if it would have still, like this last 30-minute bar, the range is so tight. You got 3.5 to 0. It's a 3.5 tick range in 30 minutes, right? Like earlier this morning, you got, you've got 10, 15 tick ranges. Right. 3-4 ticks in a 10-15 tick range. I can't, man, I'm not in the business to scalp for 1 or 2 ticks in treasuries. But for example's sake, what you have to be careful of with treasuries, and so this is such a good point though, Tom, there is nuance to this, right? Like you have to realize that the treasury window, when it's busy, it closes really fast. So all of a sudden it'll be busy for like it is 2-3 hours this morning. And all of a sudden the last 30-minute bar is at 3.5 tick range. You really have to be careful about trying to, squeeze out a few ticks in this when it gets to a 3.5 tick range in the prior 30 minutes. So it's tightened up. And so you have to look at it and you have to be smart and say, look at all the standard deviations are getting flat. All, VWAP's flat. Volume's dried up. I mean, there's just not a lot. Look at the volume drop. The last 30-minute bar from the previous 30-minute bar dropped 100,000 contracts.
Right.
236 to 135. This is out of favor now. People are back to looking at equities. What I want people to realize is too, when you get near highs or lows, volatility will pick up in this market. Set alerts. Watch for squeeze highs or lows in this market. If I think it's a two-way tape and we get back up to the high and it's near a 3 standard deviation and all of a sudden buyers are trying to buy and it can't push through it, all of a sudden you're going to see maybe the sellers come back and rotate in. It's a mean reversion market for me right now. So I'm going to look for mean reversion type trades and that squeezes.
Gotcha. That makes sense.
I mean, aside from that, Tom, I mean, to me, I think that when we look at this market, when I'm looking at it as a whole, I'm very picky with it. I'm very picky with it. This is not a market you're going to come in and see setups like you see in NASDAQ and S&P every day. But I will say this to all the traders out there that are trading equity indexes and you're a scalper, you have that mentality of like quick in, quick out. I think you should take a look at the treasuries. I think you take a look at the bonds. You look at ZB. You can also look at, the TN. The TN. Maybe I pull up that chart. I mean, I don't trade that market. When this market first came out, the ultras, I used to trade the ultras a lot. It was actually my preferred market for a couple of years. I don't trade them as much anymore. I went back to the 30-year. Or the 10-year or the 30-year. I don't trade the ultras. A lot of the best bond traders I know do trade the ultras just because they are a little looser. And once again, what do I mean by when? As you can see, I had it up earlier. The volume on here is not as big, which is what you'll want for a scalper. Touch higher tick value than the 10-year, but ultimately, when you look at it, it's to me, it's a market that moves pretty good. And I think that you go out there and you look at these types of markets because they really do fit within, I think, the context of an index trader. I think you watch them for a period of time. You can put these on sim as well. Pretty confident. I've never tried them on the sim, but I'm pretty sure that you can. I know that you can't do micros on the sim. Micro treasuries, which are the actual yields.
The yields, right.
But I'm pretty sure you can trade these on the sim. And so, go out there and try your strategies on them. I like these types of markets. Once again, data, busy times in equities, keep an eye on treasuries, keep an eye on bonds.
Yeah. Talking about sim, you do have the ability to use these in the sim. Question for you: when we were looking at your 10-year note trades earlier, and you talk about scalping, it's a 30-minute bar. How long were you in that trade?
I was in it at maybe 15 minutes, 20 minutes.
Okay.
So what happened was after this bar opened and we made a low. So right here, this bar opened and I saw that it was making a low for the day. This was the RTH low.
Right.
I basically got in at the beginning of this bar, the first few minutes, and then probably, there was maybe 5 or 10 minutes left in this 30-minute bar. So by the time, I was working orders the whole time, it spent a little bit of time down here. It didn't just blast off. I was long from 5 and 5/2, and I was still working 4 halves, and I just didn't get them.
Got it.
That's what it is. But yeah, it spent a little bit of time here. One thing I do want to point out too, which is interesting when you look at a squeeze and you're coming off of a low, when you see a squeeze like this, okay, where you see 1, 2, 3 really heavy delta to the sell side bars, keep an eye on this cumulative delta, right? Cumulative delta for the day was negative 11,000. All right. Then the market turned and it went bid. If you look at this previous sell area right here is 110.26 half. I was watching this very closely at the time. At this time, it was negative delta pretty strong here on this previous low. And when we got back into the body of this last bar, look at how many of the buyers came in right there. So the buyers looked at this and said, this is where we came in and sold. This is where we came back in and bought back. So you see how that looks. So basically they sold 3,000 there and then bought almost 4,000 back. And so when I looked at that, I'm like, just lean it. That's a good low, right? Like that's a good low today because this area, sellers tried to progress. They couldn't. Buyers came back in off this low and pushed off of where they were selling previously. And we've kind of grinded higher since, right? And maybe they did somewhat of a little bit of a, short-term high here. But once again, treasuries are predictable ranges. That's the interesting thing about them is like, this is a good range for the 10-year today.
Right.
It may not make a new low or high. It's not like NASDAQ or S&P.
Right.
So what I look for is like, do we get near the low? Do we get near the high towards the close? Do I see a squeeze opportunity again? And that's when I step in.
Question for you about cumulative delta, because I know you use it in the traditional bar chart, but you also have it on this chart. When we have two markets, you mentioned the ultras, right? And generally it seems like the more experienced traders would use an ultra because it's a higher tick value. Do you find when there's a discrepancy between cumulative delta, do you follow one over the other? Like if you're trading the 10-year, your regular ZN contract, you also have the ability to look at the cumulative delta on the TN contract on another chart that might show something different. It might show sentiment of the professionals, right? Is there any validity to that? I've seen differences in the micros and the regular E-minis in stock index futures. Is there any validity to that, or is that just the nature of the market?
So I think for the bond market, I would be very curious. I actually should talk to my bond friends about this who are really, really tuned into this. I'm not tuned into it enough, Tom, to actually make an accurate statement about that. I just don't know. I think that when I will tell I will tell you this. Because the shorter term duration of, so basically a ZN, it's a 10-year note. Okay. But really throughout expiration, this becomes, let's call it a 7 or 8-year note.
Right.
The ultra is a true 10-year note, right? It's much closer to the actual 10-year than the 10-year.
Okay.
I mean, I know this is kind of like confusing, but that's, so there is the way that the curve is spread out. So it's like saying, if I saw something in 2 5s or 30s, how would that impact 10s? And because the yield curve can get inverted, you know what I mean? Or if it's steepening, there's certain aspects of that I'm not sure that would play a role into how I would trade as a futures trader in the short term. Yeah. So there could be that they could be like, oh, it's steepening today, right? And all, but so I don't necessarily know, because you have that little bit of time duration in between there, that I don't watch that nuance. It's interesting, but I think when you compare something like a micro NASDAQ to the S&P, or the micro NASDAQ to the NASDAQ, or you compare the micro mini S&P to the S&P, I only look at delta on the bigger picture, the bigger contract, because I don't really care too much what the micro is, because somebody buying 30 micro NASDAQ, it doesn't matter to me. It's like, okay, but if somebody's buying 30 or 40 NASDAQ at once at one price, I mean, that matters. I mean, even though in the scheme of things, it's not a ton anyway, but I'm just using that as a basic reference, right? And so that's why the delta matters so much more to me in those products. And in treasuries and bonds, I personally just stay very true to the market I'm in. So like here is the 10 ultra 10-year delta. And you look at it today, kind of interesting, Tom, right? That you brought this up, because look at the delta today. It's positive 10,000 in ultras.
Yep.
It's negative 10,000 in 10-year.
Right.
This goes back to like that question of, okay, are they buying the little bit longer duration and selling the little bit shorter duration.
Interesting.
Right.
Yeah.
And I'm not saying that's what's happening, but I'm saying when you look at Delta, is that the spread right now? And
Right.
that's the spread. Look, it's just a unique thing. And I think it'd be interesting to hearing what some of these other traders out there think about this, because I am so really hyper focused on a short-term scalper type mentality in treasuries that
Yep.
I don't look at the nuance between them. I just look for squeezes is really just how I trade treasuries. With obviously a little bit of other stuff I do, but that's an interesting, unique thing. I'm curious what 30-year is today. I'm curious what 5-year is now. Maybe you've got me down this rabbit hole, Tom. Thank you.
No problem.
Not really. Now all of a sudden I'm gonna have to have double espresso tonight. I'm gonna be
That's
going,
right.
oh, look at this one. It's been negative, and it's what? We've all been there.
That's right. Well, I mean, it's through discussion with you, it just makes me think of things, and I'm sure it makes all our viewers think of other ways to look at the markets too. So we thank you for that, of course.
Yeah, I know that we're running out of time. I just want to let everybody know, look at they're adding. We're going to be talking about gold, I think, next week. And then in the coming weeks, I'm going to probably do some more stuff on energy, because I think that as we get towards the election, I think as we get towards potentially what could happen with rates, you're going to start seeing some interesting moves happening in commodities. Not that we're not right now. I think even more so in gold and commodities in the coming days and weeks and months. And CME Group now has more weekly energy options. And this plays into the 0 DTE that we're seeing in equity indexes.
Right.
And there's a lot of energy traders out there. And I think there's a lot of traders that really could benefit by taking a look at what's happening in the energy options market to help you get a little lead up in what's happening in the actual crude oil market. I've always said that the best traders I know in energies are spreads and options. They're not outrights. They almost never trade the front month, but yet all of the retail, myself included, trade the front month of energy. But what's really happening in the back end between options and what's happening in spreads, that's what really tells you the story of energy. And CME Group's adding more of those products.
Good news. That's great. Anthony, like you said, we've run up against time. Want to thank you, of course. It's great to do this with you weekly. We'll be back again, like you said, next week we'll be talking about gold. I can't wait.
I can as well. And everybody, well, hopefully you took something from today and understanding, how I approach the bond market. Don't be scared of it. Take a look at it, put it up on your chart, learn something, watch it, how it's trading on busy equity days. You never know. I found a lot of traders that have moved from equities into treasuries and have had a lot of success. So hopefully this helped you today.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.